The default directional movement of a crash is a bullish move, which means to buy. And that is why when you look at the price movement, every time you are in a crash market, you realize that it is buying. Okay, the obvious is the crash, which is the sell. Otherwise, it is bullish. While the default directional movement for a boom is a sell. So anytime you open your chart, you will realize that the boom is always selling and the spikes come in between. So in this video, I'll be sharing with you accurate and precise way in which you can sell your boom and you can sell crash. And this has been backtested, this has been proven, and I will be sharing with you the exact time frame you need to carry out this particular trade and the requirement checklist required for you to make your entries. So you won't be gambling this, you will need to wait until every requirement is made. For first thing you need to know, I've shared this video before now, but it is very important how effective it is. It is something you need to take advantage of with little analysis and you are good to go. So have our zoom level, we'll be using zoom level 3. Now this is the least zoom level, so this is zoom level 1. So you zoom out now. This is zoom level 2 and this is zoom level 3. So this is the zoom level we'll be using and our time frame is 15-minute time frame. We are not going above it and we are not going below it. And then we have our screen position. You can see that your screen is positioned at the first leg of the M or the H for the time frame. So this is exactly how to position your screen, and we are using a few indicators. Our Bollinger Band, the period is 130, deviation is 2.0, apply to close, and you click on save. And after the above are relatives 20 days, the period is 6, you apply to close, the style is 2 pixel, and the color is your background color. So if your background is black, endeavor to change this color to black. Mine is white because my background is white. Then you have your level, let your level be 30, the level is 90, 10, 50, 20, and 80 respectively, and you click on save. Once you are done, you have your MACD. This is the default setting of the MACD. The only changes you make is to the color. Okay, 2 pixel and then 2 pixel, you change the signal line to blue and you can see the setup. And then when you have done that, your chart will be looking exactly like mine. So how do we make entry following this strategy? Condition number 1, you need to see price pull and be touching the upper Bollinger Band. Price must be piercing the upper line of the Bollinger Band, and that is condition number 1 has been met. Price piercing the upper Bollinger Band. And then condition number 2, you want to see a close of bullish candle, 4 bullish candle, 4 bearish candle, 1, 2, 3, 1, 2, 3, 4. Okay, you can see this is a 4 bearish candle. Okay, and when you spot this 4 bearish candle, you will now move to your indicator window. Okay, you want to see that the histogram line of the MACD is above the 80 level, just as you can see here. The red lines are the histogram line, and you want to see your blue signal line too at above the same level, and it began to cross to the downside, and let the MACD signal line close or cross below the 80 level of your RSI, and the histogram line, the histogram bar drop same way. After that, you make your sell entry. So your sell entry would have been here at the close of that candle, and your stop loss is above here. So this, which means that you have observed, is using a 1-hour candlestick to make entry, because 4 of the 15-minute candle is equal to a 1-hour candle. And for you to see the consecutive follow-up of this candle means it's a strong move, which probably could be a movement of institution and not a retail trader. So if you have taken this entry, your stop loss above the high, you can see how this plays out beautifully. So that is one of it. And then here we have our second entry. Here is the second entry, the second signal, and in this scenario, you realize that we have been having a divergence. And what is the divergence we are talking about? Price is making a higher high. As you can see, price is giving us a higher high. But when you look at our indicator, it's giving us a lower high. So the indicator is doing the opposite of what the chart is doing. So whenever you spot this, it's a double signal for you. Okay, so all you need to do is for you to connect your trend line to the structural point, and then you wait for price to break the trend line and make a retest. You can see here price break the trend line here, retest it, and you will be on your way to the downside. And of course, if you follow it, you realize that you have your entry there. So you can see how effective this can be. You can see that at this point, price actually went out, but the conditions are not met. And you see that the spike continue. So you can't be a victim of this spike when you follow this condition. Look at here, we have the spike, but look at your indicator window, the conditions are not met. So this is an accurate pattern, a strategy that can put you in profit massively. Okay, let's look at this and analyze what happened in this scenario. For instance, when you look at this critically, you will realize that we have this first candle, second candle, third candle, and we have this fourth candle. Okay, so let's assume that you have made your entry here, because here the condition is met and here the condition is met, but unfortunately price took you out. Now anytime price take you out that way, notice that a divergence is about to occur, and you can see that price keep making higher high, and when you look at your indicator window, the indicator window keep on making a lower high. So all you need to do is just for you to pick up your trend line and mark the structural point and wait for a breakout. And as you can see, which means that in this case, once you begin to notice a divergence, you won't be making your entry based on just 4 candles formation again, just like this 1, 2, 3, 4. No, you won't be making an entry any longer, including this 1, 2, 3, 4. You will need for your trend line to be broken for you to confirm your entry, which it will definitely be. And you can see how it break it, and in this zone it gave us that beautiful entry, and here you would have make your way to the downside. So that is how you can take advantage of this. Now you can see how beautiful this plays out. This is exactly the scenario we are trying to explain. You can see here price pullback, and we have this closing candle. We have 1, 2, and 3. Right, so there is no, this is not up to 4 candles, so the conditions are not met. But even if you were aggressive and you were in, this would have taken you out, because your stop loss is meant to be at this high. So this price could have taken you out. But look at what happened. This becomes a divergence. So, and that's why I said anytime you are being taken out, what follows next is a divergence. And that becomes a double advantage for you to come in with a full force, because immediately you spot a divergence, or the next thing is you connect your trend line and wait for the neckline to be broken. And there you can see you have your 4 candles coming out, 1, 2, 3, 4. So at this level, the validity of the histogram line reaching the 80 level will no longer hold because it has signaled for you that there is a divergence. Okay, so that is the update compared to what we have shared before on our channel. And here you can see the same thing is applicable here. You can see that in this scenario, if you could have made this F1, 2, we don't have an entry here. Anywhere you see a rejection, it has violated the conditions. So you need to wait for it. And then you can see that price pull back. And this time around, we still have another 1, 2, 3. You don't need to take this. But we have a divergence that is playing out. So you can trade and make an entry based on this divergence, which is for you to mark your neckline, which is this, and then you wait for price to break through the neckline, retest it, and you will be on your way down. So let's look at what we have in crash. Okay, so the opposite is for a crash. And exactly how do we make our entry? We want to see price pull down to the lower Bollinger Band. Okay, and here we have a perfect push to the lower Bollinger Band, just as you can see here. Okay, this is not piercing the lower Bollinger Band. Okay, so this is not 100% signal, but if you want to risk it, why not? You can risk a little of it. So the condition of our histogram is that we want to see the histogram piercing the 20 level of our RSI, and of course we see that happening. We want to see the blue signal line cross above the 20 level of the RSI, and of course this is what we are seeing now. The histogram line is falling below it, which is a confirmed indication of the movement we are looking for. And I will count our 4 candles. Now we have 1, 2, 3, 4. And if you are to connect your trend line, you will have something like this. And you can see that price break out of this, retest it. You would have make your entry at the close of this candle even with this retest, and you would have been on your way to the upside. All right, so that is how you can take advantage of this. And here we have a continuation situation layer. That is for trade continuation. You want to see price pull back to the middle Bollinger Band. Price will pierce the middle Bollinger Band, just as we are seeing now, and then every condition for indicator window remains the same. The only difference is that price will pull to the middle Bollinger Band, and the middle Bollinger Band will serve as a support. Okay, for a crash, it will serve as a support, while for a boom, it will serve as a resistance, and then it will move to the upside. So those are the simple instructions and conditions you need to know and to follow. You can see how this plays out beautifully well. Here we have it pierce, and we have our 1, 2, 3 candle, and then it drops. Then you follow up again with 1, 2, 3, 4. And you can see our indicator window, the conditions are met, and it is playing out beautifully. So you can backtest this on and on. You can see our continuation combined with the chart pattern. So you can go on and backtest this. You can ask your question, and as well you can see that in this scenario we are having a divergence. So everything is applicable. This is working 80 to 90% accurate of this strategy. You can take advantage of this to grow your account of any size. In a subsequent video, we'll be sharing more light on how you can use it to grow a small account and how you can take a continuation trade based on this strategy. I believe you have learned something new. Do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we publish our next video. Peace.